Hi, everyone, and welcome to this week's edition of Straight Talk with Bren O'Brien and Tim Rowe from the Straight. Today, we reflect on the Inglis Classic Sale. Tim's been there for the week and has got a really good hold on what's gone on there and the way the market worked. We also take a look at the latest developments around Racing New South Wales' control of race clubs, particularly racetracks, and also cover up a new appointment at Racing Victoria. And we'll round out with a big week of exits in the wagering world. Tim, let's start off with the Classic Sale. You were there across both pre-inspections and the sale itself. I mean, how did the move? It seemed to me like pre-sale things are pessimistic's maybe not the right word, but certainly realistic's probably not quite the right word either. So between those two, pre-sale, probably through the sale, the mood might have sort of lifted a little bit.
Yeah, I think, people came up to me and, with us, the voice for all bloodstock media, I'm not sure, but people came up to me and said, everyone, you're being, as a collective, being too negative. Look at all these people here at the sale. And it was busy on Friday. Inspections were, I'm not saying record levels, but there's a lot of people out there looking at horses. And, people don't go out there without an intention of perhaps buying a horse or having a look. So in terms of people interested, there was a lot of people out there. But as we've touched on, all through the sales season and last year, probably off those COVID-inspired peaks, people are being a lot more selective. They're not going to throw away their money. No one wants to buy a slow horse. No one wants to intentionally breed a slow horse or a bad horse. So, they were doing their due diligence and were happy to bid on the horses they perceive to be, have all the right criteria and hopefully talent.
Well, the key metrics were good. Like I said, and the clearance rates was probably stronger than expected. Overall investment was slightly down year on year. Averages up. As we spoke before, probably a bit more of a selective market, but certainly they were happy to pay for the horses that they liked. Do you feel like sort of after, I suppose, a little bit of uncertainty and probably, it's probably been around about 12 months of uncertainty where we sort of became apparent this time last year that the market was heading in a sort of downward direction, not significantly, but certainly on trend. Do you feel like the market sort of knows where it's at now and that people know what to expect and maybe this was, bottomed out doesn't necessarily sound right because it hasn't been a massive drop down, but it's certainly been, noticeable that, I don't know, it seems like they're a bit more realistic now, Tim.
I think so. It's a professional market on both sides, by and large, from breeders and vendors to buyers. If you're a trainer or a syndicator and want to stay in the game, you need to buy horses and have horses in your stable. If you're a commercial breeder, you need brood mares and you need to be breeding. And as the thing is, as we've also mentioned, this is the most expensive yearling crop ever bred in Australia. And at the same time, production costs have gone up and sale prices have gone down, not marginally, but a little bit. So it's just sort of all conspired at once. And that's where some people are probably getting hurt, but the whole industry revolves around gambling and there's winners and losers. So you can't win on every horse. And I think it was still a quite a healthy market. And I think, people do know where they sit at the moment, for sure.
Like from my perspective, there's one elephant in the room in the industry at the moment, or one challenge that the market's got at the moment. That's the number of past-gen yearlings, Tim. So I think 394, I think was the figure across the first two sales of the year. That might have gone down a little bit. Inglis might have done a business over the last 24 hours, but let's just sort of draw a line around about that figure. And that's significantly 20% higher than the same time last year. And we reported last year on the Straight that was the highest amount of past-gen yearlings we've had in a decade in Australia across an entire season. So it is a trend. I guess, we can't really escape that. I've explored it sort of in detail in that article, Tim, in terms of the amount of yearlings left on the shelf. We probably know the reasons why. We spoke about it, the reasons why. We've talked about, as you mentioned, that much more selective market. People aren't willing to take on slow horses, cost of production, expensive yearlings, all that type of stuff. We get all that sort of stuff, but for me, it draws out the question. I posed that question yesterday without necessarily answering in this article, was, are there too many yearlings being sold each year in Australia or being offered?
Well, catalogued, I think, or offered is probably the correct question. At the end, that auction houses facilitate the market, and we'll hear from Sebastian Hutch in a minute. They don't make the market, they facilitate it. And you want to give, it's a long process to breed a horse, and it's hard to judge, what that horse is potentially worth and what it's worth to the breeder versus what the market perceives it to be worth. they want the option to put it in front of buyers. There might be multiple. Selling it and making a profit or getting money back into the bank is one thing, but also trying to get them into the good stables if you've got a young mare, or, build your brand as a broodmare farm and breeders of quality horses. You want them to get them into good stables. And the best way to do that is through, a yearling sale and breed, an auction. I don't think it's up to the auction house to cut too much. They're already very selective in these sales. I reckon there'd probably be 5,500 yearlings catalogued this year, obviously withdrawals and a crossover and things like that. Yeah, I think that's less than half the foal crop. So there's still a lot of yearlings that don't go to the sale. Some keep to race naturally. To others just aren't perceived to be good enough to make a sale or aren't worth the cost of going. So there's already heaps staying in a paddock. I don't think maybe naturally the catalogue numbers will come down slightly, but don't think the auction house will deliberately try and manage that too much.
Yeah, and we chatted to Sebastian Hutch, or you chatted to Sebastian Hutch from Inglis about this specific issue, and yeah, he doesn't feel like there'll be a correction sort of ongoing in terms of the volume of horses being catalogued at sales.
The reality is that the Australian market's been spoiled for a long time as to the liquidity in the market and the clearance. Like the clearance rate here is going to be 80% and a touch higher. In terms of international context, that's high. We cleared mid-80s at the sale last year. I think the clearance rate by the end of the sale last year was 83%. We're talking about it being 80 or 81 today. Hopefully we'll squeeze that a point or two higher over the next couple of days. That's a very acceptable, that's really fantastic clearance. And I think, vendors want the opportunity to bring their horses to market. So there'll be no intention of condensing. As much as we like to work through the spring and work with vendors to identify what we think are the most suitable horses for the sale, it's a collaborative process, and there are instances where we put horses in the sale that vendors feel strongly about that we might not necessarily agree, or vice versa, and we turn up at the sale and horses sell well that we didn't expect to sell well, and horses we expect to sell well don't. In the case of our bloodstock department, you're asking 8 or 10 people to be the eyes of hundreds of buyers, or look at horses in a way in which hundreds of buyers will look at them, and that's a hard thing to do. But ultimately, I think I'm happy with the way the catalogue's been received, the feedback that we've had on the horses. I think the vendors are happy with the way we approach the sale and happy with how we've serviced it. And certainly the feedback I've had in the short time as the sale is, or in the period prior to the sale closing out, and the short time after the sale is closed out, it's a sale that people say, "Well, I want to be back here next year if this is what it's going to be like." I think people enjoyed the fact that footfall was strong, and they enjoyed being given the opportunity to sell their horse, even if in certain instances they didn't sell their horse to the level that they might have wanted to.
Yeah, some interesting points there from Sebastian. Yeah, obviously he knows the market better than anyone else. They're out there selecting these yearlings year on year and making sure they've got the right ones to market. Just a little note, they have corrected to a certain extent this year, Tim. As we've noted, Magic Millions' catalogue was small this year, albeit still the second highest on record, and I think Inglis across their sales have reduced, their numbers by about 80 yearlings. So I think maybe there's a bit of a move for that market anyway. It'd be interesting to see what happens next year and how things planned out. Tim, I guess the expectation from this is going, okay, we got through Classic. The market was relatively pleased with sort of how things work out. Vendors would have felt like, well, it was probably hard work to get business done. They got their business done that they needed. They need to get that money in the door in order to reinvest this year, whether that be in breeding stock and also forward into stallion fees and the like. What can we expect from Premier? Because the Victorian market's an interesting state. I've sort of mentioned previously that the Victorian market's probably gone down a little bit this year in terms of investment. Actually, their investment at Classic was slightly up, where the New South Wales market was probably down sort of from 26 million to 21 million, which was interesting. We'll explore that maybe a bit later on. But what can we expect to happen in Victoria in a few weeks' time? I mean, this is the next key aspect of their sales, and we've got to sort of get an understanding of where that sits.
Firstly, of course, there's Perth next week, which is probably almost the same country. That'll be interesting to see how the WA economy is going and whether that boom keeps going, but we'll discuss that probably next week. And then Tassie, have its own issues. And then into Premier, look, as you touched on the Victorian, I think it'll be more of the same. And I'm sure it'll be just interesting how much the Victorians do spend. Nick Price and Mick Kent Jr., who have opened a Sydney stable, have been really heavy investors at the Gold Coast, New Zealand, and to a certain extent at Classic. They're really trying to make their mark. And then at Classic, and Calvin McAvoy really, spent more than $1 million along with their agent Damon Gabberty, helping them select those horses. They made a statement as well. So they saw Classic as an opportunity, and I'm sure in Melbourne with Vobis horses and those Victorian clients, and breeders as well that support those stables, they'll be active. But again, it'll be selective. There's not an Einstein about that. That's there will be the clearance rate may be a challenge in some areas. Yeah, more of the same, status quo.
In terms of that, I guess that aspect of those horses being passed in, or I guess is there in your sort of view, having sort of been across these sales across the last sort of 6 weeks or so, is it the fact that smaller vendors are getting more adversely impacted by the downturn than the larger vendors, or is it a case that it's the same across the board?
I think it's across the board. Obviously, scale helps, and if you've got quality horses to, as I said, you don't make money off every horse, so scale helps, and if you've got that $500,000 yearling that you sell for good profit margin, covers the ones that you lose on. It's the smaller breeders that don't necessarily have that horse to carry them that find it more difficult. But I think it is across the board, and as I said, just scale helps those big ones to stay in the game, and the smaller breeders that need to sell for a profit to pay the bills, finding it hard. And as we said, people bred a lot off high service fees and things in 2022. So I think the correction's already happened in terms of those mares not being bred in the last couple of years, that people are already adjusting. It's just, it's a slow burn breeding horses. It takes 2 or 3 years for that to come to fruition.
Yeah, and you're breeding of a high tide, and you're selling on a low tide. That's the nature of the market. We're probably going to see that. What I said about that bottoming out effect, I suppose we're probably going to see that. And the fact the foal crop's coming down quite significantly, it is dropping sort of, circa sort of 1,000 foals year on year. So those smaller breeders are certainly exiting the market. We'll move on to racing now, Tim. And we had a really strong reaction to a story this week surrounding Racing New South Wales taking over Crown Land management of 5 New South Wales racecourses. I think from my perspective, I wrote the story, obviously. I think one of the reasons why I got such traction, and look, it was just a report, something that happened throughout 2024, Racing New South Wales being appointed as a Crown Land manager and then assuming Crown Land management of those 5 things. But I think given the events of the last sort of 12 to 18 months, given what happened at Goulburn, which was obviously a slightly different set of circumstances, and of course the ongoing intrigue over Rose Hill, as much as that's not a Crown Land, nor technically is it Racing New South Wales, I think these type of stories generate a lot of interest around about the control of land and who controls what and all that type of stuff. Tim, there are 95 New South Wales race courses on Crown Land, 95 out of 115. Do you think it's a good strategy for racing as a whole to control the future of many of those as possible and have, that sense of controlling that land, knowing how valuable land is, particularly, a lot of these parcels of land are surrounding, towns on the outskirts of towns which are expanding?
In theory, absolutely. I think, one of the, correct me if I'm wrong, but I think Racing New South Wales has actually purchased, rather than Crown Land, have actually purchased Maruya, because there's sort of perception there's a big Greens community down there in anti-racing. So to protect that track and that industry down there, they have actually bought the track, I believe. Where the dissent arguably comes from is if Racing New South Wales have control of that Crown Land, and where the tracks and the stables are on, they can also dictate the price of rents, for stable rent and things like that. And trainers have bought stables, and technically, if the lease comes up soon, which, I believe it's the case at Coffs Harbour, for instance, what's that asset worth to the trainer who actually owns those stables and how much they're paying? Huge pressure on trainers to, cover all these costs with workers' compensation, staffing, and stable rents. One of them, if that goes up significantly, there's some angst towards the regulator about how, are you doing your bit to try and keep the costs of racing horses down? And because, of course, it goes back onto the cost of the owners.
I think, I guess the question here, as you speak about, is probably oversight. Racing New South Wales gains considerable power and influence with these type of moves, and certainly that was something that was raised and highlighted during the Rose Hill parliamentary inquiry recently as an aspect of that. Putting it in a more broader context, Tim, not specifically away from New South Wales, but this, for me, is an interesting point. Are we seeing the first move towards the end of race clubs as we know it? Do race clubs become something very different as opposed to what they've evolved? Because we've spoken before about the structure in Australia where you have, state government oversight. We have PRAs, which have existed pretty much the last 20, 25 years, Racing Victoria, Racing New South Wales, et cetera, et cetera. And under them, we have clubs, right? And there is a duplication, inefficiency, political challenges around that type of stuff. Do you foresee its sort of future in the next, 15 to 20 years? And I certainly think probably the case in New South Wales, and whereby, there's much more centralised model of running racing.
Oh, I think it's inevitable. Jason Scott, Racing Queensland CEO or outgoing CEO, he's made that point multiple times publicly that, it costs just having that duplication, in so many race clubs, and when they should all be working together, that sometimes they're working in opposite directions. The PRA and the club want different things, and who funds it, who funds upgrades of facilities and, certain grandstands and things at tracks are antiquated and need redoing. Brisbane Racing Club is the case in that. Yeah, how you get there, problem with, with one overseer, I guess, or PRA perhaps having all the say, is race clubs are important parts of the community. And so if you lose that, it's easy for someone in, let's say Queensland, Brisbane, and go, well, that club out far northwest, Queensland, that's costing us money. Let's get rid of that. Or, and that's important one day a year meeting to the local community. So it's how you preserve that, I'm not quite sure, but I think it's inevitable that they will have to cut costs, and, it costs more to run racing now, and wagering, as we know, is sort of going down slightly.
Racing Victoria have announced their new EGM of media, or media marketing and content, I think the role is, Andy Hode, formerly of Entain. It's a key role, and the future direction of racing.com is all sort of wrapped up in that. And the conversation, particularly in the Victorian industry, about the future of racing.com, where it sits, RSN, all that type of stuff. I'm hopefully having a chat with Racing Victoria CEO Aaron Morrison later today for an article the next day or so, just sort of outlining the strategy around, the media strategy around racing.com in particular. It's an interesting time for the racing media landscape, as we know quite well, Tim, but I guess what this appointment sort of does is probably set the agenda moving forward for what, not racing.com has been or was meant to be, but what Racing Victoria want to sort of make it going forward.
It's interesting, that they have hired Andy, obviously at Entain and Ladbrokes. They brought a lot of content in-house, trying to do, previously, I guess, the industry's left it to Sky Channel and Racing.coms and the papers and whatever to generate all the content. They brought it all in-house. We're doing, the TV interviews effectively that were played, on their social media channels, and, they did some great content. Let's be honest, they did, but also hugely expensive, invested millions in doing that. So it'd be interesting to what experience and plans he brings to racing.com, and how much investment are they willing to make to try and, is it a TV station? Is it and radio broadcast business? Is there print, or they do have print assets with Winning Post and Best Bets, of course, but, written content on websites and things like that would be, interesting to the future direction. And Aaron's thoughts on that will be, very interesting.
Yeah, I think it's, I think we'll probably see them have a much more collaborative relationship in a marketing sense with the rest of the media, and try to foster that. But anyway, we'll get more on that. Just a quick one for you, Tim, before we leave racing. That's Stuart Radian this morning on Blake Shinn, catching the train to the track, which I thought was an interesting little angle of it. Look, just on Blake Shinn, he's never been as busy through the first half of a season in his career. He's now 37. Nor has he ridden as many winners. He notched up 100 winners for the season yesterday, 99 in Australia and 1 overseas. So where does he sit, Tim, in your mind, among the best Australian jockeys at the moment?
I think he has to be right up there. Of course, as he mentioned in that article, there's criticism that he's riding too much and taking rides from the middle tier, or the so-called battlers in the bush. But if that's what is effective for him, he's always had a work ethic. So some athletes or footballers or golfers or whatever are very good, just turn up on the weekend with very little practice or training and can, 100% efficiency, or, be exceptional, where others, you need to train, they need the routine, riding regularly, and that seems to work for Blake. He's not a lightweight jockey as such, so being at the races and riding, keeping fit that way, rather than being in the gym and having to sweat and run around the tan or wherever he, athletics tracks and whatever to try and keep fit. Riding suits him, and good luck to him. And as he also mentioned, owners and trainers appreciate that he's coming to the Seymours or whatever to ride those, maybe horses on the up, but also mediocre horses, and to get them a win, and he hopefully gets on the good horses. Work ethic takes him a long way, and good luck to him.
Yeah, and I think that approach works specifically for Blake because, let's face it, Blake's a thinker. Blake's got a very active mind. He always has had that. So I think being in that mode of sort of going back, instead if he was a guy that had to do a lot of that time by himself in order to, his best time, he probably feels like he's best served being on the back of a horse as opposed to spending time in his own head. And it seems to be working for him. And I said, he's the leading jockey in Australia at the moment. And it's been a while, for a few years, since we've had a Victorian-based jockey at the top of that list. It's usually WA-based jockeys or Queensland-based jockeys who tend to have more riding opportunities. So interesting time. Moving on to the wagering world, Tim, and a couple of interesting stories out of the UK this week. Gavin Isaacs, the global CEO of Entain, left his job after just 5 months. No farewell tour. He was out the door before the press release hit the inbox. Interesting times for Entain. We've spoken about some of their challenges in Australia. They've had a few executives leave the team, I suppose, in Australia. I think globally this is a really just a question mark about where things sit. They spent a long time trying to get Gavin Isaacs on board. For him to leave relatively quickly is quite surprising from my perspective, but I guess we'll see how that plays out moving forward. The other one is we've seen Stake exit the UK market quickly. Their business there was run as part of a sort of third-party provider agreement, and they were pretty much told by the UK Gambling Commission to ship out. Now, what's interesting about this, obviously we've spoken about Stake before, and we cover them across, obviously, Australian owned and got an office within Australia with a lot of people working there, but also headquartered in Curacao in the Caribbean in terms of where they're licensed and how that works. And that they've sort of operated, I guess, in what we best put as grey market areas over the years where they've developed this crypto casino. But more and more they've moved into regulated markets. But what was interesting for me, Tim, is it sort of has echoes back in Australia, because what probably was the straw that broke the camel's back is there was a furore over an ad that they put forward involving a porn star, and that pretty much involved the UK Gambling Commission saying enough is enough. The Gambling Commission told Everton Football Club, who have the Stake logo on their shirt, including this morning's Merseyside derby, front and centre, they will likely need to look at other options for their front of shirt sponsor because Stake is effectively out of the UK market as of March 11th. What is interesting, I think probably what will happen from Stake's point of view is they've been moving more and more into regulated markets, South America, Italy, Denmark. I think they'll look to probably get into regulated markets back in the UK in time. And when I'm talking about regulated market, I'm talking about fully licensed within that operation to make that work. So I think probably strategically it's just a time with it. If they're trying to maximise the value of that company, then they need to be able to do it in a fully regulated way. So that's part of it. But what I do find interesting from a parallel point of view in terms of parallels for Australia is, this gambling advertising stuff and the way that gambling advertising is used. We're seeing Colossus Bet in Australia this week get themselves into a fair bit of strife in New South Wales courts over an ad that they posted. This sensitivity around gambling advertising has never been as strong, has it, Tim?
Well, it's, the UK's had its own challenges with betting restrictions or affordability checks. And as we know here, just who knows exactly where the advertising bans or so proposal and recommendations where they end up before and certainly after the election, federal election. So there's a lot to play out. It's hard for the licensed bookmakers to be certain in what they do going forward, let alone the unregulated ones like Stake. There's been suggestions that they will, try and get a license here in Australia to operate as well at some point. So, a lot to play out as you suggested.
Yeah, it's an interesting one. I guess it just sort of sets the mood across the thing. And actually, I was listening to a podcast the other day about moves to restrict gambling advertising in the United States. Obviously, there's been an explosion in the amount of sports betting in the United States as well. So this advertising stuff, which we've been talking about in Australia for something like 2 years now, it's definitely a global issue, and there are pain points along the way. Therefore, for these betting companies, if they put themselves in a situation where they're crass in their promotions or they overdo their promotions, the societal reaction back the other way is pretty strong. So I think it's an interesting point for how wagering companies market themselves across the world going forward. And obviously there's specific challenges within Australia. All right, Thanks for joining us on Straight Talk. Always good to catch you on our weekly podcast. We'll be back again next week. Don't forget to give us a rating wherever you're listening to our podcast, whether that be on Apple, Spotify, Podbean, or on YouTube. So wherever you are, you can see us or listen to us. Yeah, make sure to give us a rating, no matter where you're listening to us, because I think it's important that we, get positivity and feedback. Send us an email at editor@thestraight.com.au with any feedback you might have or any topics you might like us to cover. Okay. Thanks very much for your time, and we'll talk to you next week.